This is Agriculture Today. Welcome back. We are back for our weekly segment on our grain market report update, and we have with us Dan O'Brien as usual. He is our grain market economist here at K-State. So Dan, thanks for joining us.
Yes, thank you, Samantha. I appreciate it.
Absolutely. So let's start off as always, like we do with our futures market. I know that they've fallen from their highs, but you are warning not to be too pessimistic about this.
Well, yes, we're as you and I were talking before we came on the air, we think that with dry weather forecast off into the future, that we could see strength coming back in on the market. So if we were cheering only for prices, well, that'd be a great thing for selling prices. However, on the other side of dry weather is that it's a challenge to crop producers across the country. So we'd love to have. I think overall, when I've thought about it, it'd be nice to have lots of bushels with decent prices. That seems to be the happy medium. But as you look at it, here we closed on corn futures yesterday at 747 for the July contract. But again, that's in its closing phase. It's just about done. So now in terms of going off the board in its delivery period, we're really paying more attention to the September contract right now for setting basis levels, et cetera. And that closed at 609. So 609's fair amount lower than when we were up close to 750, 775 for the top end of contract prices in early May. So we've fallen down actually below $6 on that contract, down to about 580. Now we're back to 609. So that recovery is somewhat welcome. When you do look at the weekly corn futures, there's a RSI index that we follow. That's a measure of the momentum in the markets, and that's fallen to about 30, 35 on its indices, and 50 is a neutral market. So when you get down to basically 30, then you're pretty much a bearish market. And you can ask the question, well, what happened? We haven't seen that much change out in the field. In fact, we've got some problems out in the field. I think this fall off is in all the grain markets has coincided with the challenges that are happening in the financial markets, worries about inflation, higher interest rates, all the above, and it's caused investors to seek to put their money where they feel safest, and whatever securities they go into, et cetera. This isn't the place to talk about that here, but they're pulling money generally out of commodities and ag commodities. Corn gets involved in that. Of course, we saw that fall, as we talked about, in corn. For soybeans, we also have fallen off quite a bit, had fallen from, a close yesterday for the August contract, now the lead contract of 1585 and a quarter, had been up to about $17 in the high during this recent rally, had fallen down actually as low as say 1425 or so, and are now back up to a little higher prices. So anyway, we've got issues going on also in the longer term soybean contracts. That same 35 index for the RSI that we'd seen for corn, we're down to about 34. Surprisingly, almost the same lower momentum, which shows somewhat the generalized move hitting all the ags. That's affected soybean futures. I just would add in for that same number also for wheat futures. This is Chicago wheat, down to 30, about 38. And again, we'd fallen on prices from about 1375 to close yesterday of about 889, or about just under $9. So we just seem to have seen across these major grain futures contracts that we follow a decrease in momentum and a general malaise in the overall economic outlook, and that's affected the grains. I would say, and again, as you and I talked about before we got on air, that even though the futures prices have fallen off, the local basis levels in Kansas have responded tremendously, especially for corn and for soybeans. You look at the basis charts we have on Ag Manager. We've set in essence for the corn basis numbers. We've set we watch basically 6 locations across the state, and we are either at or above the tightest, most positive basis levels that we've seen since 2018. And the jump up that's happened isn't just a slight change. It's been almost a vertical move to the high side. So to me, that's showing that even though the futures and those that trade the futures are generally thinking pessimistically because of these broader macroeconomic factors about all commodity prices, still at the local level in Kansas, we have buyers coming in who are willing to pay a lot more than I mean, again, that's not a very scientific term, but they're willing to express themselves in the cash market in a way that basis is strengthened tremendously. So as much as the futures have fallen off, basis has come to the high side. And so we have cash bids, say for corn, in Colby of $1.55 over basis, in Garden City, $1.80 over, 90 over in Salina, Topeka, $1 over, Hutchinson, $1.11 over, $1.25 over in Columbus. And so these are all tremendous cash bids. Still strong new crop bids out in the western part of the state, positive basis of 20 over for new crop forward contract for in Colby, and 45 over in Garden City. So pretty strong. And we even have some positive basis numbers for soybeans, and that's been a rarity. At least the bids that I had seen out of Topeka, out of Hutchinson, out of Columbus, all on the positive side. So as soybean futures have dropped off, we've seen local cash markets, and not just local cash markets, because a lot of this is export demand, buyers internationally coming in and driving up prices over, contrary to the trend in the future. So now our attention switches from the futures only, in some cases, as people watch those markets, over to what the local bids are. So, and that's a good thing. Should add in while we're talking about this that yes, during wheat harvest, right now we're not seeing tremendous wheat basis bids. In fact, that you look at that whole complex, the futures have fallen off, closing yesterday at 889 for the September futures contract. And again, they had been up around 1375 earlier on, so they've fallen tremendously. But again, we're in the midst of harvest. The basis bids for wheat, even in the midst of a decent harvest, aren't just terrible. You've got about eight. Well, the highest bid that I had seen yesterday, 874 in Hutchinson, 870 in Salina, 840 Colby, 864 Topeka, even 844 even in Garden City, and that's in the midst of wheat to be sold, coming out of the field. So, pardon me, this overall world situation of tight wheat supplies is a big deal. So, anyway, just interesting to look at all those trends and see how they work out.
Absolutely. And, in terms of wheat harvest going on, we're about towards the end here. So really the fact that we're just now seeing these drastic changes, it's not too bad considering what it could have been, right?
That would be my perspective. It all depends on our point of reference. If you look at 889 futures bid and cash prices of 840 to 870, from the reference point of where we were the last 3 or 4 years, these would be unbelievable prices. But we're looking at them so often in reference to what we just had seen in the last 2 or 3 months, and that's a lot lower price, $2 lower probably in a lot of the local areas. So we're still over cost of production, and so perhaps I guess until you have the bushels in hand, a lot of it is not as real as when we now do have the bushels in hand and have these prices to look at.
Sure. But in terms of, we're hoping for some certainty here, but in terms of some of the uncertainty that we've still been shown we're probably going to have, our weather has not been our friend in terms of some of the reports we're hearing right now.
There's a lot of concern about where weather patterns in the U.S. go for the rest of summer. Respected climate analysts at DTN, if I can quote them, and other independent weather prognosticators have indicated their expectations of after some moisture coming up in the next week or so, that generally they expect to see hot, dry conditions for the rest of the summer. And you add that to some information we've got in our notes on Ag Manager about that show that the current predicted soil moisture numbers for the period that we're in aren't that good through in western half of Kansas, almost all Nebraska, all but the northeast part of Iowa, almost all of Illinois, Indiana, the western half on into southern Minnesota. These are all key production areas for corn and soybeans in the United States, and they're dry already, and we have some risk, and not a trifling risk, some real risk of hot, dry weather coming in for the foreseeable future through the rest of this growing season. So we're not trying to talk the futures up, but all that drop off that we've seen in corn and soybeans, a lot of it driven by the financial markets. It's likely, very, very likely, that if these weather issues come into play, as we're thinking that they could, that we'd see a strengthening of those markets going forward. And then if that happens in corn and soybeans, then what happens to wheat? Do we go up in sympathy with that? We might. It's harder to say that'll be in play. I would also add in, we have a WASDE report coming out next week, and I don't know what you've been hearing in terms of media reports on that, but I haven't heard a lot of discussion about that report yet. Now, coming out of the quarterly stocks reports that we just had here at the end of June, there could be some changes in feed usage for corn and some other things. But overall, the July report's important, but it's not as important as the ones coming up in August and September and October, November, when we have better numbers from farmer surveys and some field measurements of what crop size is here for these fall harvested crops. So I guess we'll see where it all goes, Samantha, but it's not necessarily welcome news as we let off our talk with that we see some prospects for higher prices if those prospects are tied in with tighter conditions and perhaps challenging yields for farmers in the U.S. in coming months.
Absolutely. And as you mentioned, that WASDE report, it's going to be coming out July 12th, but we will be covering that next Friday in addition to our normal update that we do every week anyways. So stay tuned for that. Like you mentioned, it's not the most important report that we will be getting here in the foreseeable future, but still something for producers to be tuning in and hearing about for sure.
Absolutely. Yeah, it's that we keep building the case for what adjustments we finally make when we get to these marketing years. And that's what we're about as we keep moving through time with this new information coming out.
Absolutely. Well, Dan, we thank you so much for your time this afternoon. And I know we talked about not so hopeful in terms of weather reports, but as always, we're rooting for producers and we're hoping for as much rain as they can get. So hopefully we'll get some more reports back from our meteorologist here at K-State, Chip Redman, here in the future that are a little bit more optimistic, but we shall see.
Maybe the key to life is low expectations, and we get it's like our wheat yields in some cases around the state have been better than we expected, and perhaps that's what we're looking at here. We'll see.
Absolutely, yeah, that's true. That I feel like that's what I've been hearing back from those weekly wheat harvest updates that I've been getting is just people are like, we're pleasantly surprised. So maybe that is the key here.
Maybe that is the key.
Absolutely. Well, once again, Dan, thank you so much as always.
Thank you, Samantha. Take care.
Absolutely. That was Dan O'Brien, our grain market economist here at K-State with this week's grain market report. We'll be back with more ahead on Agriculture Today.